Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, October 11th, 2024. Ron Quaranta here with my amazing co-hosts David Brill and Josh Klayman. It's good to see you both. We've got lots to cover again, but before we begin, our usual disclaimers for everyone in the audience. Thank you so much for joining us. Please keep in mind that nothing discussed is accounting, investment, legal, or any kind of advice. We're certainly not recommending any tokens, and anything that myself or David or Josh are discussing really are our own personal opinions and don't necessarily represent the opinions of our firms. Thank you all for joining us on LinkedIn and X and YouTube. If you've got questions for David or Josh, please put them in the chat. David, Josh, another week has gone by and the news still keeps coming fast and furious, including yet more SEC actions. David, let's kick it off. What's going on in the world?
Well, first thing, I just want to, send my regards to all of my fellow Floridians. Some people had some very difficult times the last couple of days, and my hopes and prayers are with them all for speedy recoveries and rebuilding where necessary. Well, while us Floridians were under a storm here, our crypto colleagues have been under a storm of litigation. We've seen a number of new actions filed this week, highlighted by the SEC's Wells notice to Cumberland. For those who don't know Cumberland, they're one of the largest market makers in the crypto space. And it's a pretty meaningful complaint that's been filed regarding their actions and really regarding the crypto ecosystem by saying that Cumberland was market making unregistered securities because they make a market in a number of the tokens that make up the crypto ecosystem. So, it feels like in these last days of this administration or this term of the commission, they're really not missing an opportunity to go after different parts of the ecosystem.
David, to that point, real quickly, you brought up Cumberland, and Josh will pull you into this, but also this is all on the heels, just to refresh the audience, of the notice of the Ripple appeal that the SEC put forward, the notice of to crypto.com. I believe they received a Wells notice. I think there was another crypto exchange. So it seems in the wake of the enforcement head at the SEC stepping away, someone put their foot on the gas again. Josh, is that an overstatement? And, is this just all politics?
So I think it's a good question. I think probably a little of both. What I would say, some things like the Ripple appeal, those have certain time deadlines, right? So I think that's something a bit different. What I would say is that notwithstanding that we have said, and some folks at, former staff from regulators have said, it seems like the big cases predominantly are out there. I think we have said for a long time on this roundup that it seemed like potentially the SEC, if we think about a roadmap for covering all different kinds of players in the crypto asset space and crypto asset related market players, that liquidity providers and market makers were somewhere along that continuum. I think, in addition to the case that David mentioned that launched, we also, of course, saw multiple charges against what the SEC called so-called market makers, as well as individuals. And allegations with that, they had to do with wash trading, among other things, and allegations that there was artificially inflated liquidity numbers and volume of trading. Yep. So I don't know if it's that people are necessarily putting their foot on the gas now, or if this was just already in queue.
Yeah. Josh, David, I want to differentiate a little bit for the audience as well. When we talk about these cases and we look at, I'm thinking again, Ripple and crypto.com and Cumberland, certainly, these are very distinct cases based on some would argue based on questions of law versus, you alluded to this, Josh, the Ponzi schemes, and the frauds that are out there. And I just want to be clear to the audience, when, the SEC is bringing these cases, and those fraud cases are important for investor protections perspectives, the cases we're talking about are questions of law in the eyes of the defendants. David, when we take it in that context and we look at some of the changes that are happening, again, I don't want to make it too political per se, but someone recently said, we might as well be able to say, here's who's left that they're not going to sue. It's a shorter list. David, will there be more before Election Day?
Look, I was just making some notes, and as I think about it, you have litigation against exchanges,
Yep.
you have litigations against market makers, you have litigations against issuers. There have been a couple of litigations brought, or Wells notices brought against VCs.
Mm-hmm.
And then there's been actions brought and fines for custodial violations. I mean, you're really hitting almost all of the flywheel of the crypto ecosystem with different types of cases and actions. And so, look, there may be others looming, but I think two really big themes that I'm seeing are that one, be careful what you ask for. And with regard to Ripple and potentially Coinbase, I think I've heard anecdotally that Coinbase would be seeking to join in the Ripple action that goes to the Second Circuit regarding the treatment of secondary trading of crypto assets. And so, if the circuit court reviews whether it be Ripple and or Coinbase and looks at the facts and makes a determination that, I believe would be in favor that secondary trading of crypto assets are not securities. I mean, that would really potentially make some of these other cases that they're looking to bring very difficult to bring, and they may have to, remove those charges from some of the other cases they're bringing. So,
yeah,
it's a high stakes game of poker, that they're playing. And the other thing is, with the amount of cases or Wells notices that are being filed, how many of these cases can the commission litigate at once? I mean, you really have to wonder. These are very high profile cases, complicated issues of law. And, you really have to wonder how many of these cases can be brought at the same time.
And to be clear, Josh, to that point, real quickly, this is not the SEC's only job, crypto, right? It's the entirety of, securities markets and taking action across a lot of different marketplaces. Josh, go ahead, weigh in on that.
So I would just, a few things come to mind. One thing I just wanted to point out was with holding aside the initial, the action that David specifically mentioned by name, the other cases that were announced en masse, those purport to be fraud cases. So I would say it's interesting that they're bringing those because often this is just my personal view. I know we already have all those caveats, but typically when there's a fraud allegation, it would seem that would mean there are bad facts. And as we know, bad facts can lead to bad law.
Yep.
So I think, who knows, it could be that the SEC is trying to have a strategy where it has certain cases brought with, quote, bad facts. Like if we think about SEC v. Do Kwon Terraform Labs, where the holding was quite favorable to the SEC, those were bad facts, right? Those were not necessarily the, if we're going back to the movie analogy that we've used in the past, it wasn't the documentary, it was the horror film, or just kidding, but you know what I'm saying. The other thing I would say is it's really interesting. We did talk a little while back when the SEC first announced the cease and desist order with Shapeshift for that very low penalty, right? And we said, hey, this is the first time the SEC has just addressed dealer, right? And they used the word market maker in that very short cease and desist letter. And it seems that the SEC may have been priming the pump, so to speak. No pun intended. But just
careful
in terms of having something on the books, I didn't even think of how that was going to fall or land. Something out there to say, look, we've given you warning, whether or not it's the case. And as we all know, we were puzzled by the SEC v. Shapeshift cease and desist order, as the activities at issue had been ceased for quite some time, actually years. And also notably in that, there was no admission of liability or bad action.
Josh, let me stick with you for a minute, and then David, want to pull you in, certainly. The other side of that conversation that's always fascinating to me, and you mentioned Cumberland and we mentioned crypto.com, and we've mentioned Ripple and all of these others, really is the circumstances that the defendants bring forward, which is, and I'm paraphrasing here, we've been talking to the SEC for 2 years, for 3 years, for 5 years. And we thought we were making good progress. I mean, they're not two kids showing up at the SEC headquarters. They're going with lawyers and business executives and compliance specialists and AML KYC specialists, go through all that work, and then get a, hey, don't bother coming back anymore. And the next day they get a Wells notice. David, Josh, why is that the case? Why can't they make progress here?
I think this has been something we have talked about numerous times on the podcast, but this is the part that I think a lot of people in the industry find disconcerting, is that you have companies, whether it be Robinhood, whether it be crypto.com, Cumberland, you have different companies that have gone in, that have had substantive conversation, and they've reached a place in each of those 3 instances where a Wells notice gets filed. And look, sometimes these issues are intractable, but I think in each of those cases, they've sought a path to being regulatorily compliant, but they just haven't been provided one. And I think at least in 1 or 2 of the cases, Robinhood has a broker dealer. I think Cumberland, I don't know if it's Cumberland, but I think all of the 3 that I mentioned had means to sort of find a way to be compliant if the goalposts were being moved to be compliant. But, there has to be a path. And I think, Commissioner Ayuda said it best, is that there's just been a lot of time spent on enforcement and not enough time spent drafting the rules of the road.
Right. Josh, let me ask you this question. I'm going to rip up the script here a bit. But when we look at the circumstances that David was just mentioning, are regulators immune from being accused of operating in bad faith in circumstances like that? You'd almost think they are. I think I left her speechless.
I mean, as we've seen from the Deadbox case, regulators can operate in bad faith, and judges can find that way. I mean, as to whether the engagement in conversations was in bad faith, wasn't there, don't know, right? However, what I would say, to me, it seems like a fundamental sticking point could be, across a variety of situations, that we know from existing law under the Howey test and otherwise, that certain tests involve facts and circumstances. And the Howey test is not a bright line test. So the SEC taking a bright line approach, this essentially sets not a rule, but takes the position that tokens themselves, or depending on the filing, or the transactions involving those tokens, are securities. That's a bright line. And that bright line doesn't exist. So I could see a scenario in which parties in good faith over a long term do converse with the SEC about, okay, so as we've heard, some have said into the market, so which ones are you concerned about? Which ones do you think? And if the answer is all of them except for Bitcoin, or all of them except for Bitcoin ETH and Bitcoin Cash, right? Whatever, we may say on the date, or some other tokens, that are out there as well, that I could see causing an impasse, right?
Right.
But I think that is, and I guess the question is, I could just restate your question, which is, if you knew that it was going to get to that, what was the point of engaging in the conversations, SEC? Right. But yeah, I also just want to say, with respect to not the 3 fraud cases, but the other case that recently was filed that David had mentioned, that company has made a statement on the obviously on the internet, but I feel like I'm in 1990 here, 1999. But a public statement providing its own explanation and framing for that as well.
Yeah. Ron, I would also add that, look, I think we all agree that having, different litigation strategies, as a corporate defendant or a corporate entity makes sense. But I think we have an expectation of our regulators that they're going to argue the same way and the same law in all the different cases they bring if they're looking to enforce under all those cases. And so to argue, one set of, facts in the law and applying the law in one way and then doing it separately in another way and then creating some of their own terminology, which they had to walk back in a third place. This again, as a regulator, this isn't a corporate entity that's, coming up with clever legal strategies. This is, a place that people are going to get guidance. And so I think that is something that is also difficult, for companies that are trying to be compliant. Look, if you look at the landscape, well, in the Ninth Circuit, they said this. In the Second Circuit, they said this. In the Third Circuit, they said this. Yeah. In the DC Circuit, they said this. If you're sitting there trying to advise your CEO or your board on what's the right approach,
right?
There's 4 different approaches. And then the last thing that I don't want us to lose track of, they are still bringing up tokens that they are alleging are securities without bringing actions against those issuers.
Right.
And I don't wish that they bring actions against specific issuers, but I think universally people will agree that those issuers should have the due process and the chance to defend themselves and not be collateral damage in these actions. And I would really like the judges in these cases, and some have, to really say that unless you're bringing a case against this token, this shouldn't be the forum for you to argue whether or not this token, who cannot defend itself, is a security. Or again, the investment in the token, not the token itself, is a security.
David, thanks. Josh, I'm sure you noticed, but for the audience, David very eloquently put in there the footnote in one of the recent on digital asset securities where they had to apologize for its use, but in another filing, use that same phrase.
On the same day.
On the same day. David, you brought up something, and I want to ask Josh to fill in the blanks for me, because you brought up issuers, and we've had this conversation for many, many years, and we've seen SEC actions where they list specific tokens. Josh, to my simplistic brain, why wouldn't the regulator put enforcement actions to specific token issuers themselves? What are the roadblocks to that for people who may not understand?
I mean,
I'm ripping up the script again. Sorry.
Yeah, I don't know that there necessarily are roadblocks, right? If they want to bring suit against someone, they certainly can and will. That being said, if there's a definitive answer, in that case against in respect of a specific token or transactions in specific tokens, then they can't argue. Then they're kind of, if we're talking about litigation strategy, then they have to deal with whatever the result of that is, right? I mean, let's just imagine that for a moment, if the SEC had brought suit against certain trading platforms and others and had been alleging that XRP was a security, right? We know from Judge Torres, at least for now, pending, any sort of results of appeal, that, the answer isn't clear. And I don't think the SEC wants, I shouldn't say what the SEC wants. In my view, what the SEC is doing now allows it, from a strategy perspective, although caveats, I'm not a litigator, but it doesn't have to commit to certain different things that it might have to commit to in terms of positions and arguments if it actually were faced with a verdict or actually even were engaged in a litigation in respect of that token.
Josh, are you saying strategic ambiguity is a real thing, as we've heard from some colleagues?
I'm saying that, but beyond being an ambiguity, and this is maybe something just to tie in here, we saw one of the SEC commissioners, and it wasn't Commissioner Purse. She's not alone on this, but we saw Commissioner Ueda, on I think it was a Fox Business panel saying that the policies and the approach of the SEC over the last, number of years have been a quote disaster for the whole industry, end quote. Yep. That whole thing wasn't a quote, that was a paraphrase, but that
it's
last
a good paraphrase though.
Yeah, and so I think, strategic ambiguity, as you put it, that would be helpful maybe for certain litigations brought by a regulator. It is not helpful for the landscape and for those actually working in the industry.
Josh, David, thank you both so much. For everyone in the audience, thank you for joining us. If you've got questions, again, for David or Josh or I, please put them in the chat. Jamie, welcome back. It's good to see you. Josh, David, let's address the question, how do we ensure enforcement when key players leave the agencies and those remaining either lack a clear understanding of the rules or when no clear rules exist at all? My basic answer will be you need people like David or Josh at these agencies. But David, Josh, how do we answer people like Jamie and others who have that question? Maybe they just don't understand it.
Well, look, there's smart people at the agency. I think that if some of the senior people leave, there are other people who are aware of the facts and have been conducting the investigations as part of the group. But it is problematic, if you had, chairs or the people leading these, like the head of the enforcement group leaving, it makes it harder to prosecute these claims.
Right.
One other thing I want to mention is that several of the companies that receive Wells notices, are affirmatively bringing their own actions against the commission. And that's just more litigation that the commission is going to have to engage in and defend. Yeah. So it really brings a question of, it feels like there's this view, we are going to shower the industry with Wells notices. We are going to give Wells notices in each part of the ecosystem. And then, maybe they just sit and wait and decide which cases are going to bring based on, sort of where the judicial winds are blowing and what their resources are. But I think one other thing that I had mentioned in a different podcast, but I want to mention here is one thing that really does concern me is by stacking the deck with all these Wells notices and potential complaints, what happens if we do get a new SEC commissioner? Are they going to be bound to bring all these cases? I mean, we know technically speaking, they're not bound to do that, but how is that going to be handled? And if we do have a Republican administration and a different commissioner who has a different viewpoint about crypto, how does this all get resolved? Is there some grand bargain that comes out of this, or what happens? But institutionally speaking, you put another 1 or 2 years worth of litigations in the queue for the commission to work on, depending on who comes in as chairperson.
David, it's a really good point. And shout out to Adam Goldberg and Dina Ellis. We did our policy update yesterday. And I think, David, you were kindly in the audience for that. If you recall the conversation, we raised the point of, should there be a new commissioner or a new chair at the SEC, for example, can they, with the stroke of a pen, make these cases go away or at least change the approach? And I believe it was Dina who raised a really good point that, keep in mind, there are people at these agencies, really smart people who have spent hundreds and hundreds and hundreds of hours doing the work. And from a logistical and operational perspective, not only is it difficult to say, oh, just make these cases go away, but you've got to manage those people in these agencies. I think 5,000 people work at the SEC who are now going to be told, oh, all that work you've done over the past 4 years is now irrelevant. It's a very challenging position, David, and I think it's a really, really great question. David, you alluded to one point, and Josh, I wanted your opinion on this as well. I'm not aware, and maybe you both are. If not, someone in the audience certainly let me know. If we took the word crypto out of the equation, is it common for defendants in SEC enforcement actions to automatically sue the agency?
So I haven't done a survey of the existing landscape, but I would say, just judging from the press and this strategy, I personally haven't seen it to this extent. That doesn't mean that it doesn't exist. Certainly, I'm focused on our industry, not to the exclusion of all others, but principally focused on our industry. I do think it's interesting that some of these cases have been filed before that people become defendants, right? Because when they get the Wells notice, then they can have the Wells submission, which, if we go back to the olden days, when Kik made public its Wells submission, that was like considered unusual at the time, right? To say what his arguments were going to be. Here, I mean, I don't know whether these companies are still, or these projects are still going to submit Wells submissions or what. But I think the one, that we saw just very recently was Crypto.com's suit against the SEC.
Yep.
And one of the things that it had argued was that, similar to what we were talking about earlier, that these allegation that the SEC established an unlawful rule that trades in nearly all crypto assets are securities transactions, no matter how they're sold.
Yeah.
So I think it's, they also were looking for some sort of confirmation. I believe they filed a petition with the CFTC and the SEC to confirm through a joint interpretation that certain digital assets are solely regulated by the CFTC. Now, given that the SEC has taken the position that transactions need to be looked at as opposed to just digital assets, I think that is an interesting question. But there is an article about this in a number of publications. I'm looking at one in Cointelegraph that says Crypto.com sues the SEC to, quote, protect the future of crypto, end quote, in the US.
David, did you notice that Josh called the kick case the olden days, which just tells us how fast time is going? Josh, really good points. David, weigh in here. And Jamie, appreciate the link. We'll address that soon.
So it was very unusual to sue the SEC, suing a regulator. But I do want to mention that Mark Cuban did file a suit against the SEC after they brought insider trading claims against him and a case against him. And he did win that case.
Right.
But these cases are really expensive. And I really want to highlight for our viewers that, these cases, defending these cases runs in the millions of dollars. And so it's not something that these companies take lightly. Yep. And, I think that people just should be aware that there's, a huge cost. There's discovery. There's all the motion practice. And, look, we have top flight litigators in the crypto space, and we're fortunate to have them. And they're very valuable in the space, and they're expensive. So this is really, not only is it a philosophical debate and a commercial debate, but it's a real expense for these companies who are just, who want to conduct business. And it's sort of an unfortunate cost of doing business in our space. And the last thing I would say is, if you look in the totality of things, like, it may be that the most expensive part of the crypto ecosystem in the US is legal and regulatory, and not building and not hiring, but literally legal and regulatory expenses that they're incurring to do business in the US. And I don't think that's what anybody wants.
David, Josh, good points, important topics that we address pretty regularly in our legal working group. Let's kind of move on, David, because you use the word business, and I think it's really important, because the truth of the matter is, the other side of all of the conversations we have is, and Josh, you and I have talked about, builders keep building. David, the other part of this, and I'm ripping up the script again because we don't even bother prepping anymore, is we're continuing to see inroads by major TradFi firms like BlackRock and beyond, Fidelity, in tokenization and leveraging digital capabilities to grow their markets and to offer different offerings to the marketplace. What are you seeing in that space? And Josh, a lot of these are clients of yours. David, in your role within your firm, certainly these clients are crossing your radar as well. Where is that focus going? Will crypto and tokenization continue to be eaten by Wall Street?
Again, you and I always, talk about this. I don't view it as being eaten by Wall Street. I view it as Wall Street adopting these. And so, again, I think the ability to offer funds and money market funds and mutual funds using tokenization and using the ecosystem and the blockchain is really a way to wring out costs. Right. And so I don't view wringing out costs and making it more efficient to roll out these services as sort of eating crypto's lunch or eating, the crypto ecosystem's lunch. I think it's a natural evolution of what we always expected to happen. Yeah. I think what's missing is that because of the regulatory environment here, we are not seeing the major consumer apps leveraging crypto and blockchain that we expected to see, because there's so much uncertainty in the market here. And you're seeing that in Asia, and you're seeing that, in the Middle East, but you're not seeing that here. So I would say we are seeing it with TradFi, and we are seeing products that I think, customers want to use. But I push back on the eating the lunch analogy.
Josh, that's David's way of telling me I've overused that tagline. But Josh, weigh in, please.
So I agree with David. I have some additional thoughts, which are, if you go back to before the ICO boom,
oh yeah,
right, and you think about what was out there, not exclusively, of course, Bitcoin was out there and others, but before the ICO boom, I mean, I remember hearing a lot from banks. In fact, that's how I first started hearing about the industry, right? Was this idea about smart contracts and how it would reduce legal spend. Right. And actually, I think to many of us, including me, I don't know about you guys, if you guys had better functioning crystal balls, even back then.
Not mine.
I was surprised by the ICO boom. Like, I thought that banks were really going, and Wall Street was really going to take a lead role. And I think I was surprised for a long time at how slowly actually the progress had been made, comparatively speaking, from what, if we think about, some of the, I won't name them by names, but some of the initiatives that and joint activities that went on back then, before the ICO boom.
Yeah.
So I think now it's interesting to see it begin to ramp up and continue to ramp up again. That being said, in addition to the cost cutting, I do think that, a number of institutions are looking, they do see certain use cases in the market, where they think, hey, this is an additional revenue stream for us, not just cost cutting.
Yeah. Josh, it's a good point. And just looking back on my history in fintech broadly, and I agree with you, it seemed like it was going really slowly. And everyone in the industry was saying, look at this great technology. But the thing I think people forget is it is really hard to displace long-standing incumbent systems.
Yeah.
And there's always, at a strategic level, the deep concern about not only the ROI of, hey, should we use a blockchain-based technology, but the deep concern of what happens to our customers if it goes wrong. So when you see these kind of enterprise adoptions, they take 5-10 years sometimes. But I agree with you, David and Josh. And David, I won't use the eating crypto phrase anymore, but I do want to ask about the other thing, David, you and I texted a lot about. Let's talk about the price action, because I think some of that's reflective of the use cases that are out there. I think some of it's reflective of speculation and concerns about the election. But David, it really seems like Bitcoin, by way of example, just can't hold above 60-61 for more than a few days. What is going on?
So I think you have a number of issues. Like, one thing you saw is that when Iran attacked Israel, there was like a sell-off of risk assets, and Bitcoin dropped, $3,000 or $4,000. And I think, so for one thing is that, again, not putting my geopolitical strategist hat on, I think it's universally believed that Israel will respond to Iran's attack. And I think there are a number of people sitting on the sidelines waiting to see what happens and what's the result of that, and realizing that likely things will sell off after whatever their response is. And like, fool me once. I don't know that people are necessarily fooled, but if they saw it happen one way, I think there's an expectation that it will happen the other way. And why do I want to get in front of that?
Right.
I think the other thing, which I think, Ron, you're really well positioned to talk about, is, you've got these very lumpy numbers with inflation and the jobs reports, and the idea that we're going to get a 50 basis point cut in November looks like it's totally off the table. The idea that we needed one in September looks like it was off the table, and that it should have been 25. And so, like we've talked about before, stronger dollar, weaker crypto, weaker dollar, stronger crypto. And, we've seen rates climb up above 4% again. So, I think those are two sort of macro trends that I look at and see and look at why price has been, depressed a little bit. And the last one is, I hear anecdotally that the miners are selling en masse, and that they're really, except for one or two, are just, as they mine, they're selling as much as they can. And I think that's a function of the business models and, needing the liquidity.
David,
So I would say those three are reasons. But Ron, I know you have a view on this. What's your thinking?
I do. I broadly agree with you. I think I always sound a bit cynical, but I'm a little worried about the data again. The reason I say that is, and you both know me a long time, my initial perspective is always, it's not the preliminary government data, it's always the revisions that count. And when you peel back the layers of this, I'm going to get wonky on some of the data. Everyone in the world screaming inflation's been beaten, happy days are here again, interest rates will come down. But as you start looking through the layers of the data, core CPI is up for 2 straight months. Producer price indexes, I think net, some specific data points are up in the past 2 or 3 months. The jobs data that continually gets revised are, and David, you've mentioned this very eloquently, is usually government or government adjacent job roles, both federal and state government. So again, I'm not trying to be this sky is falling perspective, but I think it's a little early to talk about inflation being beaten. And I think it's a little early to talk about soft landing per se, and I could be wrong, but I think that's a headwind. I think that's a headwind to a lot of money that would go into riskier assets, including Bitcoin. And it's going to take a little time for that to vet out. And the overlay of all of that, David, is the election. Because the truth of the matter is all of this data being revised is going to smack right into the November election. And now we've got the overarching concern of who the heck's going to be running the government? Or is the election even settled? Do we even know who the president's going to be, given how tight some of the numbers look? I think all of this, David, is headwinds to where a lot of people think market prices could be. I mean, I can't even talk about today. I'm just looking at the screen. It's like it's a good uptick in the marketplace, but I think there's fundamental concern with some of the data. Josh, go ahead.
So questions for you guys. One of them has to do, I'll just ask them both and you guys can address them. One of both, well, actually, the first is an observation, which is just that in addition to the kind of minor selling, I think maybe one of the things that could be in people's mind is this upcoming sale or return of the Mt. Gox Bitcoin, right, to holders. That's been delayed, postponed, but that could have, pressure on price as people may decide to sell. I'd love to hear your thoughts about that. Also, I'm just wondering, really question, why is MicroStrategy, why is that performing better? The shares in MicroStrategy performing better than actual Bitcoin?
Well, look, David,
go ahead.
Please,
go ahead.
Weigh in or correct me if you disagree. But the price of any equity is the perceived discounted value of that company in the future. So it's never a reflection of, oh my God, Michael Saylor's amazing, let's buy the stock, even though it's doing better than Bitcoin, and it may be. It's at a fundamental level, what's this stock going to be worth 5, 10, 15, 20 years from now, discounted to present value? It's an expectation engine, ultimately. And I think that's what people are looking at. I think people are saying in 10 years, Bitcoin's going to be worth, pick a 5 or 6 digit number. I won't do that anymore, David. And extrapolate that to MicroStrategy holds so much of this. That means MicroStrategy is going to be worth a lot more in the future. That's
7 or 8 digit number.
7 or 8 digits. certainly not the 6 digits I've wagered with David apparently anytime soon. But Josh, for me, when I go back to old Graham and Dodd fundamental analysis, it's discounted value of future cash flows for that equity. David, do you agree?
Yeah, look, I'll tell you, Josh, many years ago, I was an equity analyst for a bulge bracket Wall Street company. And I learned a lot in that period of time, modeling, cash flow, expected return on investment and things like that. And so I think all of those things play a part of it and what people think. But I think ultimately, people are very bullish on MicroStrategy, their ability to raise money and to buy more Bitcoin. Constantly being able to hit the debt markets and being able to buy it. I think as they stare into the different options, hey, look, if I want some exposure to crypto, maybe I buy some Bitcoin ETF. Maybe if I'm really adventurous, I buy some of the Ether ETF. And you know what? I'm going to put a few chips down on MicroStrategy too while I'm at it. So I think I think people are viewing that as one of the ways to get exposure to the space in a regulated way, and in their stock account, and their whether it be bulge bracket or account. So it's a very easy way to get access. And the last thing is, Ron, as I know, his eyes lit up because I'm reading his mind. There, a number of the wirehouses don't allow access to the Bitcoin ETFs, but nobody's stopping their clients from buying MicroStrategy. It trades on the exchanges, so that might be their only way of getting access. So I think, again, a little bit long-winded answer for you, Josh, but I think those are some of the reasons why.
I want to point out, Josh, that David brought up discounted cash flow modeling on one of our roundups, which is amazing. He probably spends weekends doing weighted average cost of capital calculations for companies. And Josh, I promise I'll go through WACC with you over cocktails with David.
I mean, I'm just now envisioning David, in addition to his crystal ball, he has an Excel spreadsheet that he's modeling.
He's got a turret of computer monitors around him at all times, Josh. But David, I think it's a really, really good point. We've only got a couple of minutes left. Josh, David, obviously one thing I'm going to shamelessly plug our October 24th event, the WSBA Crypto and Blockchain Summit 2024, happening in Midtown Manhattan. For those of you in the audience, again, thank you so much for watching. If you're interested in joining us, go to the WSBA website, WSBA.co. For all our members and colleagues, there's still some seats available, but those are running out quick. You get to see David on stage. You'll get to see Josh on stage. You'll get to see Chris Broderson. You'll even get to see me on stage, which is shocking. But if you can join us, it'll be a lot of fun, great conversation, and great networking afterwards as well. Josh, I wanted to give you a couple of minutes for your final thoughts on some of the things you'll be looking for in the coming days as you retire to the vineyard of your estate in New Jersey.
I mean, I think I want to catch up with the enforcement actions and other sorts of statements that have come out, not just with the SEC, but also, what's going on with the FinCEN 2019 guidance and things like that in light of the Tornado Cash developments. But I think a lot of it is just, I'm sure you guys are having a similar experience, just incredibly busy right now with lots of deals coming live and lots of just very busy. But also, I think next week at some point, I'm excited. I'm going to catch up with a number of people. I'm planning to go to this 10th anniversary party for Keiko, right? So I figure some of the, it's interesting as we talk about, where we were way back when and
the olden days.
Yeah, the olden days. But it's great to see, as we talked about, builders keep building. It's great to see projects thriving. And I think also, I caught up with someone last weekend at Warden RegTech who was, mentioning about, Ethereum's 10-year anniversary and that there was some kind of event in Zug for that. So really, exciting to look back.
Josh, thanks so much. David, sources tell me you've pre-ordered 10 Optimus robots from Tesla to replace the house staff at the beachfront compound. I want to ask, will you be paying for that in Doge?
Well, frankly, somebody from Tesla reached out and offered to let me demo one for our podcast. So hopefully, maybe we'll have one of those for our podcast. Look, I think these technological advances are fantastic. And, I think regardless of, I know Elon can be, a figure, polarizing in some ways. We should just celebrate like the technological advances that are occurring, and regardless of where you sit in the world. So I will be actually in New York next week for some meetings for a few days, and I'm really going to be focusing on thinking about reading these complaints also, and just thinking about like what happens next, and also really trying to dig in a little more into the consumer sentiment numbers are low again today, and really just thinking about on a macro level, like where we think the market can go. Because I think fundamentally the view has been it's going to be October, and any day now we should be sort of getting on that glide path. But with the geopolitical issues and some of the other noise out there, I'm curious if this is going to become Upvember or up November and October being more flat. So I think as I fly up to New York, I'll be doing a lot of reading.
David, thanks so much. I will be spending an inordinate amount of time ordering pigs in a blanket for the event with the caterers, as well as going through the catering menu and certainly working with the team and all of our panelists for the October 24th event. The other thing for me, interestingly, it's not just law, as important as that is in trading and banking. We have enterprise and technology folks within the WSBA. We have accounting folks within the WSBA, and I have the unenviable task of reviewing the IRS's guidance on broker reporting requirements for 1099 reporting, which means next year's tax returns are going to be a nightmare. But with that, I will leave it there. David, Josh, as always, it's such a privilege chatting with you both. For everyone in the audience, again, thank you so much for joining us. We'll be back next week as well. If you've got additional questions for Josh or David or I, info@wsba.co. I hope to see so many of you on the 24th. David, Josh, we will leave it there. Have a great weekend, everyone.
And the Jets will beat the Bills Monday night.
And I'm not wagering. Don't ask. Bye-bye.